The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the January 23rd, the fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 change, means we can find a gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know I'm absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email, send it off early, and send it to steve@tfnn.com. Inside that subject heading, please put radio show question. Of course, if you're inside our Tiger's Den, and you should be, well, then any and every ping will do. So let's go ahead and get this show started on Fabulous Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, probably should tell you it's a beautiful 77 degrees out, going to be in the low 80s today. All you people that are in that snow cold territory, get your butts down here now. Come on down. We got the Dow that's down 221 points. The S&P's up 12. NASDAQ 151 to the upside. Russell's off 27. Tranny's 126. Semi's down 67. NASDAQ Composite up 138. Gold's up $52. Silver's up $4. Light sweet crude is up $1.41. Natural gas up 30 pennies. 30-year Treasury up 8 ticks. Leading our charge dollar-wise to the upside, you've got Microsoft up $16. Life 360 up $15. Meta $13. Spotify 13. Bank of Montreal 13. To the downside, First Citizens Bank shares up $187, nearly 9%. Goldman Sachs off almost 3%, $25. United Rentals $23, 2.5%. Madrigal Pharmaceuticals $23, 4.5%. Plenty to look at. Of course, I want to look at what you want to look at. Let's start by looking at the equity future contract. So take a snapshot of this picture. If I put up my white background charts, we're going to have different pieces of information. Those different pieces of information being two profile levels, one for the ES mini that shows support at 68.58 and resistance or a sell zone between 69.69 and 70.14. In the case of the NQ, it's got profile support at 25.127. The center's at 25.535. We're trading above that. We should go target the top of its profile, 25.943. The Dow Equity Future contract still continues its A to B equals CD pattern to the upside. An initial price target of 51.236. Price remains above profile resistance. No reason for it not to continue along that path. The same is true with the Russell 2000. The Russell 2000 has a small A to B equals CD pattern to the upside. 27.98 is its price target. And as long as price remains above 26.79, the top of its profile, that is still a likely outcome. If we look at the market breadth inside the New York Stock Exchange, the advanced client oscillator still remains above zero. Buyers are the ones that are in control. If you're short, be careful. If you take a look at the Spot VIX Index below its 50-day exponential moving average. And I would say if we start trading below yesterday's low at 1527, so far right now we are trading out at 1532. We start trading below 1527, you're just going to see a further rally inside the S&P 500. Basically, it says don't be short. Now, maybe there's some other intraday time periods, 10 minutes, whatever you're looking at. That's giving you more of the general, bigger picture out there. If we take a look at another level to watch the NQ specifically on a rally, it's sitting right now at its apogee pivot point, which is 25,846 out there. And I mean, I think we hit it almost right to the T. If we start trading about 25,846, what should you expect? A further rally inside the inside the NDX 100, but most certainly inside the NQ. I gave you the profile, the new profile level on my black background system. That would become the target. Inside the S&P 500 or the ES Mini, its resistance point is going to be 69.8575. That is its apogee pivot point out there. 30-year Treasury, a little bit of a rally, but we can see that apogee has turned that down. Light sweet crude right now is trading it's really trading right on its apogee pivot point at 60.77. We got above it, and now we pulled back and we're testing it. You can see how before we had traded lower, and when we were rallying, all rallies were finding resistance. So is old resistance becoming new support? I don't know the answer to that question. Neither do you. But if you continue to watch the $60.77 mark, as long as price remains above that, the answer to that question would be yes. If we take a look at Goldilocks, gold traveling higher in all the major currencies as we speak. I'm referring to the euro, the yen, the pound, the Canadian loonie, the Swedish krona, the Swiss francs, all of those making up the U.S. dollar index, as well as the Chinese yuan, and even in Russian rubles at new all-time highs. If we take a look at the horizontal trading ranges, though, we can see that gold is about to approach a potential level of resistance. That's up at the 5,003 area. This is a monthly time frame chart for Goldilocks. These are its horizontal as well as rising price channels. Let's go put in the new rising price channel out here. All we have to do is just simply, first we got to edit the chart. There we go. And then we just simply have to add another 100%. So if you give me a second here, we will get over to the channel line. There we go. Let's add this one in. Right there, that's not it. Let's change this color to green. Let's change this reading to 5. And now we'll see where the next actual horizontal rising price channel level is. So if we're able to close above 5,003, it looks to me like price has a date with its 1 to 2.618, A to B equals CD pattern to the upside, as well as its next rising price channel, as well as its next horizontal trading range boundary line, all in the 54.19 to 55.28 level. But right now, what's most important is watching that 5,003 area. If we take a look at the horizontal trading ranges for silver says, hey, Stevie, I'm not any kind of resistance here. This chart happens to show this is a weekly time frame that shows both the weekly, monthly, which are red, daily, which are blue, horizontal price trading ranges out there. So it looks to me like what silver wants to do is not just stick here at the $100 level and turn down, but head up towards the 107.79 level. How about that? The old Morgan dollar is now the new U.S. $100 bill out there. I don't think there's anything left on this set of charts to take a look at. So we'll move from this screen and come back over and take a look at, not here just yet. We'll come back to that. Let's take a look at our daily equity future contracts, see what other piece of information you need to glean from them. The ES Mini, the key level that you're watching here as well, is going to be its oscillator and change line. That is currently printed at 69.65. When we close above that, 69.81 is going to be resistance, and then 70.22. The NQ is traded above its green oscillator and change line. It's traded above the top of its profile. That's on the white background systems. This suggests a rally up towards its recent highs. We already covered the A to B equals CD patterns in the Dow and the Russell 2000 out there. Steve Rhodes with TFNN. We come back to this break. We just have a few questions. Let's go ahead and get to those. That is a take a look at gold for Coda. Of course, we've taken a look at a little bit of it. WWR for Dan, GVO for Dan, and the Russell 2000 for John C. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We kind of briefly did an overview of gold during that first segment out there. But to add to it, we've got a question that came in from Coda inside the Tiger's Den. So we take a look at signals that we have out here. The daily time frame negated its TD9 count topping pattern. It did that on Tuesday. So on a daily time frame, there is no topping pattern. Rose momentum indicator signals are present, but those need bearish reversal candles to confirm a top. We're in bar number 4 to the upside out here. So no reason for gold not to continue to run. The caution sign is really out on the weekly time frame. We're going to confirm a TD9 count top today. We will complete that pattern on next Friday. So between today and next Friday, you could get a top, and that top would then pull price back to support. Now, on the weekly chart, that number would be 45.89. On the daily chart, it's 47.74 at the moment. It's also in change line. The monthly time frame says, I don't know what the weekly chart is doing. It's off the ranch out here. Why? Because it looks like gold is going to negate a monthly TD9 count top. Do it. Hold on a minute. My apology. Wait a minute. Let me do this here. Let me just make sure that. Me a second. Sorry. Sorry. Hold on. Jeez. I got to put up the continuous contract just to make sure we've properly caught the TD9 count pattern. And then I have to restate what I just said. So don't listen to what I just said there. Okay. So on the monthly time frame for gold, what we've got out here, Coda, is we are in the bar following bar number 9. That says that the top comes in January. Now, we have traded higher 2, 4. This would be the 6th consecutive month to the upside. And not that we can't trade more than that. I think I only go back 365 days on this. But the last time that we traded higher for 5 consecutive months was back in July of 2020. That led to a 4-month decline out there. I'm not predicting a 4-month decline, but we are getting a caution signal on the monthly chart. We are getting a caution signal on the weekly chart. And so you know what that tells us? That tells us those caution signals, they will get executed when we get a daily topping pattern. Right now, that would require a bearish reversal candle. We may not get that, by the way, but when that does happen, at this moment in time, as long as those TD9 counts are in effect on the weekly and the monthly, that is the message of its chart. So hopefully I pulled that together okay and rallied into the end. Let's take a look at, there's a question. Take a look. Let's stay with the metals for the moment, and let's take a look at silver. Silver's in the March contract. I'm going to put the silver contract into continuous mode on the monthly time frame as well. That way I can provide you with accurate TD9 counts, which I think was the request out there. Now, in the daily time frame for silver, silver negated its Rhodes momentum as well as its TD9 count top. It did that a couple of days ago. It is in, I've got a daily wave number 7 out here, so it needs a lower high to confirm that pattern. Also needs a bearish reversal candle to confirm a Rhodes momentum indicator top. The weekly negated its TD9 count top. It did that last week. It's got no topping signal, says it wants to move higher. It is silver on the monthly time frame that is negating its TD9 count top. So maybe we're going to be in a situation where gold pulls back, but silver keeps moving higher out there. But the charts for silver are just simply flat out, all out bullish. And they're saying that they want to trade even higher. Maybe the Morgan dollar is going to become the new $200 bill out there. So I hope that helped you out with regard to the TD9 counts and just what gold and silver are doing out there. The last one being from, I think that was from Peak G, as a matter of fact. Let's go take a look at WWR. This is for Dan inside the Tiger's Den. Pull up its set of charts, see what WWR is doing. It's trading out with inside its daily profile, Dan. So it forms a TD9 count top about a half a dozen days ago, pulls back, tests and rejects the green oscillator and change line. That's your buy point. That's a buy entry area. Now we are back inside its profile, and if today closes above 114, odds favor that it will make its way to the $1.31 level. Close above a $1.31 negates the daily TD9 count top and says we resume higher. That next resumption would get us to $1.54. $1.54 is the daily TD9 count breakdown area. We also would trigger an A to B equals CD pattern to the upside with a close above the TD9 count top. That has volume about 4.9 million shares. We're trading to that swing point today with 2 million shares, so we are trading into that swing point with volume. A close again above that $1.31 gets an A to B equals CD pattern to the upside. The weekly time frame chart is trading with inside its profile and above its green oscillator and change line. No reason for it to not stretch to the 190 level, the center of its slightly bearish weekly profile. And on a monthly time frame, I forgot to, sorry about that. Let's do this here. Let's change that back. Get this back in sync. There we go. We ought to get the WWR monthly charts up on my screen here momentarily. Not really going to give us a ton of information. Let me pull this back. So I've got profile resistance, Dan, at the $1.44 level out there. So hope that helped you out with regard to WWR and that you're seeing something similar. Let's take a look at GEVO as well. See what this is doing. See where this is trading. Right now, you've got this trade above the top of its daily profile at 209, trade above its oscillator and change line, which is red, not as strong as a green oscillator and change line. Nonetheless, this should rally further. It can't rally further, though, until the weekly chart is able to clear its oscillator and change line at 221. We can see how that, if we're asking, hey, why did the rally stop where it did today? You now have that answer. It's really right there. Isn't that kind of cool? Really, that we can do this with these charts and they can help us really answer the question with regard to where's the message of the markets. On a monthly basis, as an example, we've got price that's trading with inside its profile. And that's anywhere between $1.20 at support and $2.37 is resistance. So not only do you have resistance at 221, you've got it at 237. But Dano, you close above 237, then we ought to get to the 268 area out there. So hope that helped you out with both of those, WWR and GEVO. And as always, thanks so much for playing the game. Hey, let's give Stevie a few requests. We've got a request as well to take a look at the Russell 2000. So let's do it this way. Let's do it my way. Okay, so I think I can get to, I believe it's going to be right here. Let's see if Stevie guessed right. Come on. Come on, give it to me. He did. There we go. Perfect. I don't have the right future contract, but we'll change that here momentarily as soon as these charts here populate. This way, what we can do, John, is we can look at the Russell, the IWM, and the and the future contract. So give me a second to change that. And so we take a look at the Russell 2000, the cash indice out here. I'm just simply going to open it up so we can take a look at it. So you can see an A to B equals CD pattern. So let's go ahead and draw that in here. The A point is going to start down at the low from November 20th. The B point's a TD9 count top back on 12/12. We're just simply going to go ahead and copy and paste this, and then we're going to go ahead and assemble it. And that makes us a CPA. And now what we can see here is we got an A to B equals CD pattern on the upside with a price projection of 27.7260. So today's candle, even though it does show that we've got an island top, all right, so there's a caution sign, but it's not the completion of a pattern. When I say we have an island top out here, we gapped up yesterday. So the high from the day before was 27.0380. Yesterday's low, 27.15. Today's high, 27.12. That creates that little island top. But these candle formations are best when they complete a pattern, and we do not have a completed pattern on the daily cash indice. Of course, we're not going to have an island top on the Russell 2000. We don't have that kind of gap up and gap down. That would only take place at 6 o'clock at night. We come back to this break, we'll finish looking at the Russell 2000 equity future contracts. These are anything different, as well as the IWM. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. So you got the A to B equals CD patterns for the Russell 2000 equity future contract in the center of my screen and the IWM to the right. I guess you can see we have not completed those. So today's candle is basically irrelevant, just kind of interesting. Now, what I can provide you with is some support levels, John, on the cash indice. It's going to be 2676 on the Russell 2000 future contract, both 2687, 2692, and the IWM 265. Basically, 265 is going to be your support level. So I hope that helped you out with regard to those. Thanks so much for your question. Let's go take a look at the Australian dollar here from McGuppy. AUSUSD should be should be on my screen. It says stock, so that's kind of interesting here. If I need to go to the black background charts, I will, but this ought to pick it up. We're going to find out here momentarily. And come on. Nope. That wasn't it. Son of a gun. Okay, so what I'll do, McGuppy, is I'm going to come back to the Australian dollar, and I'll get things set up during the next break on my black background system. I'll see if I can somehow pull it up in the white system as well. Let's go move on to CRDO. My apology for that. I don't know why it isn't pulling up, but as you can see, it's not. So let's go on to CRDO, and this is for Texas Tom, and he's wondering, is there any interest here in taking a long position? So here's what we know about it. One, this form, it likes the TD9 count system, that's for sure. Well, how do we know that? Well, it forms a TD9 count bottom on November 21st. Forms a TD9 count bottom on December 17th. Forms a TD9 count bottom on January 7th. We're in bar number 6 right now. You know what I'm going to say, Texas Tom? I'm going to say the fourth time is the charm out here. Yeah, no, it's not the dollar sign, McGup. Yeah. Anyway, so if we take a look at the CRDO, you're in bar number 6. We're trading below its breakout level of support. We're trading into a swing point, the most recent swing point, January 7th. Volume about 10 million shares. So far today, in 2 hours of trading, we're down with about 1.5, so that's about 4.5 million shares out there. So you're pulling back with light volume. But I say, based on these other bottoms that are out here, why don't you wait to see if a TD9 count bottom forms out there? How did this happen? Yeah, it's really weird. What did I do? Oh, I know boy, did Stevie screw up or what? No wonder nothing came up before, too. Okay, let's go back here. Sorry about that. I was definitely in the wrong set of charts. So let me get here, CRDO. We get the daily, the weekly. The daily was correct, but the weekly and the monthly were not accurate. They were still showing the Russell 2000. So, okay, CRDO. So nothing changed on the daily time frame. The weekly time frame, Tom, we are trading just below the bottom of its profile. So if we get a close today below 135.27, it increases the odds of moving back to 128.71 and perhaps making that daily TD9 count bottom pattern. The monthly chart is sitting to support at 134.36, but support is 129.48 out there. So, yeah, I say your question was basically any interest, I guess if I paraphrase, and I say interest in next week to see if this forms a daily TD9 count bottom. So keep an eye on it, and then let's come back and take a look at that. We got Bob in Spokane who want to take a look at Ethereum, ETHE, the ETF out there, I believe. He didn't want the future contract. So let's see if we can pull up ETHE. We can. Trade out to $24.09. So this is trading below profile support and a red oscillator and change line, and therefore is likely to move lower out here. I see a series of lower highs today, even being another lower high. So pulling back makes sense. Pulling back to where? The bottom of the weekly profile is at 23.24. So since we're trading below the center at 25.81, that really becomes our price target. We can see the monthly chart here. Ethereum rallied up into its monthly oscillator and change line and back down So everything here is pointing to lower price, Bob. You also want to take a look at HRTX. So let's get HRTX up on our screen, see what that is doing. HRTX is consolidating with inside its daily profile. I do not see a top. I see a Rhodes momentum indicator signal, but that needs a bearish reversal candle to confirm a top. Price is trading with inside a bullish structured profile. That bullish structured profile has a buy zone between $1.40 and $1.44. Price right now is dealing with its green oscillator and change line. If price is able to close above this level being $1.45, we're at $1.45, it would increase the odds that we're going to make a move up to $1.54. That's supported by the weekly time frame chart, which has a small A to B equals CD pattern. Let's go ahead and draw that in. It looks like we have at least attained the 1-to-1 level, but let's make sure of that. Not that that actually matters. That was the wrong tool. Let's try the correct tool. It's usually better to use the right tool. There's our A to B. I'm just simply going to move this line over to the C point. I hate using that same swing point for both the B and the C point, and that's what I'm going to have to do here. Well, if I can grab this thing, I will. Weird. Okay. There we go. All right, I am not going to do that. Okay, so even if it's got an A to B equals CD pattern, which it does, that needs a bearish reversal candle to confirm a top price is trading above profile resistance, oscillator, and change line. But it's lost some momentum. We haven't made a new high this week out there. But nonetheless, it still looks good. It's just the monthly time frame chart is trading below profile support, so not a great thing. $1.99 is a resistance level on a further rally. So daily consolidation. Weekly just buying this time while the daily figures out what to do, and the monthly's willing to move up towards the $1.99 level out there. So that's what I see when I take a look at HRTX. Hope that helps you out. SAT-P wanted to take a look at GWRE, so let's go see what this is doing. GWRE right now trading at $1.58, 158.69. I don't see a bottom pattern. I see price trading with inside its profile. That profile's got support at 157.82, resistance 164.45. The weekly time frame chart is going to negate, or did, I apologize, it negated its TD9 count bottom pattern last week after having formed. So this says lower price. Lower price to where? Man, that's really a great question out here. So I'm just going to let me check out one thing here. Let me see if we go from here down to here. What kind of retracement? About a 0.382 retracement. So that would work. That most certainly is going to work. That just so I got an A to B equals C that I'm going to draw in here. There's a couple of them. Whoops. There's a couple of them that we could draw. I'm going to do the more aggressive one. So there's our A to B point. This time we're just simply going to copy and paste and then move it over. There we go. So that works better. So there's your A to B equals CD pattern. You can see that we are down past the 1-to-1 level. So what that tells us is this A to B equals CD is on the daily. It's also SAT-P on the daily. And that needs a bullish reversal candle to confirm a bottom. Both of them do. The monthly chart says I want lower price as well. So no fusion, no buy signal yet on GWRE. Steve Rhodes with TFNN. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We finally got the Australian dollar up on our screen out here, thanks to Fletch, who caught my mistake. So that, or not Fletch, but McGuppy, who caught my mistake. So we take a look at the Australian dollar. First thing, let's start here on the longer-term picture. On McGuppy, if you take a look at the monthly time frame chart, you see the larger A to B equals CD pattern that is in place out here. That gets us up towards the 70. Let's see, what does this give? About 72, yeah, 0.7219, right around that level. That pattern, A to B equals CD, is also shown on the daily time frame. I've got 2 different A to B equals CD patterns on the daily. The larger one that we're looking at, for example, on the monthly. The smaller one on the daily, which has attained the 1-to-1 price objective. Now, if we do see a bearish reversal candle, that's going to generate a sell the D point top. What price would then do is pull back to its oscillator and change line, and that currently is printed at 0.6775. The weekly time frame chart is the one that has got a caution sign because it's going to confirm a TD9 count top today, but it won't complete that pattern until next Friday. And based on the way that it looks like the daily is trading, although we have traded higher, this is going to be day number 6 to the upside consecutively. But still, the way that this has been trading, if I look at the daily time frame over the last 6 trading sessions or so, all we see here are higher lows and higher highs. So that's got to change out there in order for that to say, okay, maybe there's something, this thing is getting ready to pull back. But the way the weekly is trading, the way the daily and the monthly as well, looks to me like this wants to, if it forms any kind of a top, it doesn't happen until sometime next week. Does look like it's going to be right now. So McGuppy, I hope that gave the information you were looking for with regard to the Australian dollar. Closing this week above 0.6750. That was a weekly TD9 count breakdown level. That's a bullish thing. But again, it's going to form bar number 9 of a TD9 count pattern out there. We can see that that's coming off of a 3-week move lower out here. So you ought to get at least a 2-week rally. So I think that TD9 count on the weekly doesn't take place until next week out there. So hope that helps you out. Sat P wants to take a look at the MasterCard. MA is the ticker symbol. Let's pull those charts up on our screen, see what they are doing. MasterCard trading down to $526.15. It's going to go ahead and confirm a TD9 count bottom pattern today. It'll complete that pattern on Monday. Prices tested a prior swing point. Let's check out the volume metrics. The swing point from November 18th that had 3.5 million shares was tested as it was making a TD9 count bottom with 5 million shares. So that said that we would be back down there to test that level. We haven't gotten all the way down. Oh, have we? Hold on. Let's see. The low, 524.98. Today, 525.24. So we haven't tested, but much lighter volume. 1.2 million shares in 2 hours of trading, going against 3.5. It's a similar kind of volume. Daily time frame set is going to confirm a TD9 count today, complete that pattern on Monday. Wait till Monday to let's see what kind of information we can get. Why wait till Monday? Because the weekly chart, quite frankly, at day's end could confirm an A to B equals CD pattern to the downside. All it needs is a close below 524.70 or at 526.02. So the volume on that weekly candle is 15 million shares. This week we are at 15 million shares and we're short a day. So if we close below, this is really key, 524.70. Now, it doesn't necessarily have to be today, but if maybe on Monday we close below it and triggers it A to B equals CD pattern to the downside. So be patient on MasterCard. Sat, hope that helps you out. Fletch wants to take a look at Amgen. So let's pull up AMGN, see what Amgen is doing. Want to go long. Let's see if we can find a bottom here. Well, we don't. I see the question is, do we have a top? So we take a look at Amgen. It will negate a weekly TD9 count top today with a close above 346.38. It's 346.38. And we're at 347.72. Your question was to go long. Well, that would be a momentum move. So if we negate the TD9 count top out there, that would be a momentum move. Now, maybe what this is setting up is a new weekly A to B equals CD pattern. Let's check out the volume. The volume on the swing point from December 5th was 14 million shares. This week, less one day, we are at 10 million shares. So now you're going to have to go back and do the math on that to see if we've got a confirmed A to B equals CD or not from a volume standpoint. But that would be so that, you'd be playing momentum. If we look at the daily time frame, does the daily time frame support playing momentum? Well, the daily time frame has a small A to B equals CD is what I would say. It's got a B point that had volume of 3.5 million shares, passed with 3 million shares. Yesterday was with another 3 million shares. So not confirmed with volume or anything. A monthly time frame chart. Let's open up this booger. See what we've got here. So you're going up against a swing point on a monthly basis from July of 2024. Volume here, about almost 40 million shares, 39.7. This month we are up with so far 39 million shares. That's pretty good. What you really need to see here, Fletch, we're kind of at this inflection point. You do what you're going to do out here. The question is, and it should be able to close above that swing point from July of 2024 at 346.85 and with volume of 39 million shares, but I don't know if it's going to or not. It's got the volume to do it. It's got the pattern with a 1 month pullback, so no reason for it not to do that. But what you'd be playing here on Amgen would be a breakout. So I hope that gave the information that you were looking for. Someone wanted to look at AVGO. I just put AVGO on my system. It came in from the Tiger's Den. My apology for not writing down who it was, but nonetheless, we'll go ahead and get you a review of AVGO. So this today may trigger an A to B equals CD pattern to the downside. It needs a close below 321.42. We're at 321.39. Volume today so far, 16 million shares for 2 hours, going against 73 million. So we're lighter volume-wise out there, but nonetheless, if we do close below 321.42, we will go ahead and trigger an A to B equals CD pattern to the downside. That would give us an approximate price projection of about 266.36. The weekly time frame for AVGO shows that we are trading below its bullish structured weekly profile. So if we close below 330.29, increases odds that we move lower. Now, its downside price target is 246.46, the TD9 count breakout level. The weekly swing point has volume of 410 million shares so far for the week, 105, much lighter volume. But doesn't matter. You close below that low, you trigger an A to B equals CD pattern downside. The monthly time frame has a TD9 count top, has a Rhodes momentum indicator top, and right now we are trading below its green oscillator and change line. Current print, 327.33. If we do close below that at month end, it it increases the odds that we're going to make a move towards a 283.41 level. And if we get below that, that's what gets us down to 217. So right now, we would say that Broadcom Avgo is pushing lower. It's pushing lower daily. It's pushing lower weekly. And right now, it's pushing lower for the monthly time frame. And that's a beautiful thing. Well, I've gotten through all of those requests, but maybe there's some that have come in by email. And in fact, there is Roger in Boulder. No, that was Roger in Boulder who wanted to look at that. He was also interested in the MAG 7. Let me put MAG 7 up here on my screen. MAGS is the ticker symbol. Let's go see what its chart signals are providing to you and I. It's rallying right now, and it's rallying right up into resistance, the MAG 7 ETF out there. That resistance point is 65.85. If you close above 65.85, you're very likely to head up towards the 67.85 mark. Steve Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We're taking a look at RR. This is for Ron in Denver. Ron, this formed a daily sell the D point top yesterday. This is probably about a 1 to 2, A to B equals CD with that bear shooting star. Now, prices pushed back and it's held support at $4.12. But normally you get at least a couple day pullback out there. I really think what it wants to do is at least target the oscillator and change on at 394. So that could be a place where you would consider entering. Caution here, as well as a sell the D point top at prior swing point on the daily time frame that had volume of 87 million shares. That was tested with 55 million shares. So not enough volume to push up. The weekly time frame chart, find resistance at its oscillator and change line, and just a consolidation on the monthly time frame. That's what's going on with RR. Yvonne wants to take a look at Twilio. TWLO is a ticker symbol. Let's get these charts here populated, see what they are telling us. Twilio is running into daily resistance at its green oscillator and change line, having completed a TD9 count bottom pattern yesterday, Yvonne. If price can close above 128.49, you ought to see a move towards the 141.99 level. On a weekly basis, price is consolidating with inside its profile, 117.84 up to 145.90, and the monthly chart here is trading above profile resistance and its green oscillator and change line. It is bullish. Let's go take a look at Netflix for you. NFLX is the ticker symbol. We've got Netflix trading out at $86.16. It is trading. Oops. A moment, just trying to find the profile. There was a new profile for me. 86.76 is going to be the first target. That's the bottom of its profile. That formed yesterday. If price can clear that, get above that, you're looking at 88.69 to 90.62. We don't have any kind of a bottom signal on the weekly other than getting back to its breakout level of 82.11. That can be a bottom, but boy, we'd like to see some type of bullish reversal candle on the monthly, sitting at support at 82.58. Lastly, I'll put up the chart here for GSM. It's really for Dan inside the Tiger's Den, who's looking at this, thinking that it might break out from here. I'm not going to have enough time to go over that for you folks, but we can do that on Monday. In the meantime, have a fabulous Friday, a wonderful weekend. Thanks for all your assistance this week. Be safe out there if you're in the cold blizzard zone. Otherwise, come on down to Delray. We've got the greatest golf weather this weekend that you could ever want. Take care, folks. We'll see you soon.